Hey, Friday, stay ready. Today, I'm going to kind of chat about how certain factors really impact interest rates. So, before we get right into it, I'm going to do a quick dad joke for you guys. Actually, this is going to be a pickup line, kind of the continuation we did last Friday. This one's a bad one. Like not like it's a naughty one, but it's just bad. I'll tell you guys as soon as and you'll know. Do you like Mexican food? It's pickup line. Do you like Mexican food? Because I want to wrap you up and make you my Bae-ritto. Bae-ritto. So use that on your significant other and partners, just for funsies. All right, so getting right into it. With the market, with everything that looks like right now, not great. I'll be completely honest. We did see some relief, a little bit of relief last week, as you kind of see these dips that we saw on the 10th, basically pretty much that entire week until like Friday and today. So we saw some relief in regards to mortgage rates. That's basically when I locked all of my clients. It dipped down probably into the mid sevens, but now it popped back up to where it was the week before in the high sevens. So you can kind of see this chart all the way from August, end of August, basically, and up until now, it's been a sharp rise. If we kind of go back further, it's been kind of just doing that a lot. And we're again, of course, expected to see mortgage rates to come down at some point. We're not sure when. So unfortunately, that's where rates are at. This is coming from MBS Live. It's not coming from a company generated website. No ads. Even if we look at, go to Google and type in the average current mortgage rate. You'll see something generated by Google. It's roughly, and this is for conventional. So if we add in different loan programs, take up 30-year fixed, put in FHA, even USD, they're about the same. We're roughly seeing about the same numbers all across the board. So naturally, VA is always typically a little bit better than everyone else, but this is currently where mortgage rates are at. So if you want a more exact idea what average mortgage rate is at, this is a good way to look at it through Google. Typing average current mortgage rate, and you'll be able to see this. Make sure you filter out for the right loan programs. I have a subscription to this thing called MBS Live. It gives a lot more advanced and detailed information, which it's not really required, but I like to see it. Just kind of, I'm a huge nerd. Alrighty, so these are things. This is how the mortgage rates look. What essentially happened is this relief had to do with, of course, the really sad, unfortunate events that's happened in Israel that gave us these dives in the mortgage rates that we saw. Now that things are kind of, I guess, haven't escalated more than they have, it's kind of providing a little more stability in the market, and this is essentially what's happening. Another thing is that the inflation reports that came in last week did not do much. If anything, they were slightly higher from month to month. However, inflation is staying relatively steady, which is a good sign. So overall, things are moving expected, but one thing that we want to keep in mind of is all the information about the quote unquote silent depression. Again, that really just has to do with the state of where the economy is at. Home prices being up high, interest rates being high, wages haven't really changed with inflation and how home prices have changed. Of course, inflation being higher and all that stuff. So we have basically a quadruple whammy of a lot of things happening to the economy right now. What's not helping anybody at all. So if interest rates are high, nobody's buying those more expensive homes. So on and so forth. Everyone's mortgage rate is around, let's say, 7 or depending on the situation. So I have a little list of things here that I'm showing to you guys now, and it really just goes into a person's interest rate from the without any adjustments. So let's say the adjustment is, let's say the standard rate is average rate 7.5. Well, one thing is that can make the interest rate worse, meaning less down payment. This doesn't really apply to a VA because the VA is 100% down. They don't really mess with that. But what's really interesting is that the more of a down payment you do, generally the better your interest rate will get. And to that whereas there's no interest. adjustments. Sometimes there's a credit toward their interest, toward the interest rate. They make those adjustments for those interest rates, but they all have those adjustments. So down payment, we found out the sweet spot is around 15 to 20%. Anything past 20% doesn't really help anymore. Credit scores also have a very, very big factor. Generally, for us to kind of figure out what makes the best loan program for a specific client is if they're above a 720 credit score or not. This is for non-VA clients. Non-VA clients will get generally the better rates at about 660. So at 660, they're going to have about the same. They're going to have a better rate than a conventional client above 780. Now the credit scores very, very interesting because generally as you get higher and higher in the credit score, the better it is. For me, when I'm looking at a client, whether to go FHA or conventional, I see if their credit score is either at above or below 720. The reason why that is because below 720, mortgage insurance is more expensive, and so is the interest rate. Above 720, in comparison to FHA, so FHA is a little bit better below 720. Above 720, conventional tends to be more superior because of the mortgage insurance reduction happens a lot at 720. And it's better than the mortgage insurance being paid with FHA. So that's how credit scores can impact the interest rate. Types of properties. Manufactured homes typically have a higher charge toward the interest rate than most other home loan programs. Sometimes there's an adjustment for condos. Even state location has an impact, really, really small impact on interest rate. Loan programs. Certain loan programs have a higher rate than other home loan programs. VA most times will have a slightly better rate for a lower entry level than FHA and conventional. So even if I showed you guys that chart here, you can already see that's if you look at most times, the VA is, I think in the orange one, most times VA is below the blue line, which means rates are typically better than conventional. So you can kind of see most times VA is below conventional. So sometimes it has to do with the loan program most of the time in regards to how they're looking at it. So it just depends on the situation. Now, another thing is number of borrowers. Sometimes if there's more than 2 borrowers, it could cause more issues. Another factor is debt to income. The lower their debt to income sometimes, the better their rate would look. So those are just the most common things that we've seen with interest rates. So there's a whole lot of things. So when you quote interest rates, just be mindful that this is a client that doesn't have any. Typically, the rates that you're quoting as a real estate agent is rates that have no adjustments. So, and most clients will have some kind of adjustment depending on all sorts of things. And obviously, some of them is not impacted. Some of them aren't even impacted by the borrower. So it could be impacted by the property completely or the state or the location they're buying in. So when it comes to that kind of stuff, make sure you put in that disclaimer saying, hey, these is if you were above this credit score or blah, 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 right? It's a number of things, a number of factors. That's why you want to get with a mortgage specialist, mortgage advisor, and really fine tune what that really looks like for that specific client, because every client is going to be very, very different. So anyway, I wanted to give you guys that insight, that information. Hopefully this was kind of give you some details, how to market. Otherwise, it's all I got for you. Hope you guys have a great week. Nuke out.